My name is Aidan, and I'll be doing the motion breakdown for round 2 of Australs 2025. Today I'll be talking about the build to rent motion, so that we should incentivize the construction of build to rent housing. I'm not going to do like a full kind of explanation of my topic selection thoughts. And I haven't, to be honest, I haven't really thought in depth about the other two topics. But just as kind of a quick explanation of my thought process, or the kind of mental shortcuts that I used when kind of looking at these motions for the first time, is that in terms of the Singaporean model, this seems like a pretty good AF, or at the very least, I think it's a real uphill battle for negative team. The reason being that it's a support motion, right? And so negative doesn't have counter fiat. And so for negative team, it seems like you can't counter fiat something along the lines of, well, we would invest in different kinds of public housing, or we would do housing construction in this other way. You need to prove why all of those things will be likely, and not only that, you need to prove why it's likely that you'll be able to get something of the same impact as significant investment in housing construction under the Singaporean model, which I think is a little bit difficult, or at the very least is like really annoying to do. An affirmative team will probably hound you on it, and that's just not something that I would have liked to get into. The other one on banning individuals from purchasing more than 2 existing dwellings, my intuition is also that this is pretty AF-weighted, just because there's a pretty obvious argument that, well, it's nice that individuals can't just like buy up a bunch of investment properties and squeeze people out of the housing market, but also because there's an argument about why it leads to greater volume of housing. Because if people can't buy pre-existing homes as investment properties, then they have to buy newly developed homes as investment properties, and that incentivizes investment in construction of new homes, which is presumably good in a housing crisis because it increases supply. So I guess like as the negative team, I would have vetoed one of those two topics. I think I probably would have vetoed the bottom one on banning individuals from purchasing more than 2 existing dwellings. But I think it's really a coin flip for me. And then as the affirmative team, I would have vetoed the build to rent motion, just because I would have wanted to get one of the other two ones that I think is better for the affirmative team. And so build to rent isn't the topic that would have eventuated from my if I were AF and neg doing topic selection, but I think it's the one that's the most balanced, and I have the most to say on both sides. Obviously, looking at the results of round 2 now, I look a little bit silly saying that, but that's just sort of the thought process that I went through. I just think that because this is like a policy motion, negative team can counter model something good, and then there's a real debate there, right? I think that it's there's far more scope for negative team to kind of fight back, whereas I think that they're starting on they're really starting on the back foot in the other two topics. So again, I guess motion statistics make me look like an idiot, but you can't predict everything in the first couple minutes of topic selection. Okay, in terms of setup, quickly, for affirmative team, what does it mean to incentivize this development? It can look like things like cheaper land deals, so the government, sells the land to these development companies for less money. The government can subsidize utilities for an initial time frame to make the startup costs less large. They can provide tax exemptions, et cetera, all of the things that governments normally do to incentivize private development. It's also probably handy for affirmative team to do other setup to preempt arguments a negative team could make. So for example, they could say that, well, we would ensure that no single fund can have a monopoly over any given area. So like BlackRock can't buy all of the new apartment buildings within a particular like suburb. We would give incentives to a large range of different funds to ensure competition, that sort of stuff. I think that could be useful. I would recommend negative team having a counter model in this debate, just like because you can, and I think that it creates more trouble for the affirmative team. The negative counter model that I don't think is a great idea is saying that we would instead build public housing. Firstly, because I'm not sure if that's allowed, given that I think it probably uses sufficiently different political capital. But secondly, I just think, and more importantly, is that this would be far less efficient at actually like building homes, because for affirmative team, all they're doing is incentivizing the development of these these rental properties. And so, yes, the government has to pay a little bit of money on like, doing tax exemptions, but that's nowhere near the cost of the government, like fully building from scratch, like apartment buildings on their own. And so I think that negative team, if they went down this route, would just lose on volume. The negative counter model that I think is pretty sensible is that we would instead incentivize the construction of housing that is to be bought by individual buyers or give assistance for those seeking home ownership, which I think would have the implication of there being more construction of housing that is to be bought by individual buyers anyway. Because if there are more people who can buy homes because the government is giving them assistance, then development companies presumably have a greater incentive to build housing that is to be bought by those people. If this is the counter model, then some of the new housing will be bought by people to just live in. Some of it might be bought by individuals to rent out to others, in which case the main difference between the two sides of the debate would be institutional investors renting out homes to people on side affirmative, and individual landlords renting out homes to people on side negative. So the first clash is on renting versus buying. So obviously on side negative, there's far fewer people renting and far more people buying their homes just to live in, right? So yes, some people on side negative will buy homes. Some individual landlords will buy homes to rent out to other people, but lots of people will just buy the homes to live in themselves. So what can affirmative teams say in defense of renting? The first thing they can talk about is that it's far easier to opt into renting. So oftentimes it's really difficult to get a bank loan on favorable terms to buy a house. Most people don't have very great credit scores, don't have lots of money lying around to kind of pay the upfront fees for buying a house, all in one go, et cetera, et cetera. Whereas, renting is expensive, but it's expensive over a larger period of time. And so it's far easier for people to just get a roof over their heads in the here and now. And secondly, affirmative team can say that renting is better because it affords more flexibility, whereas home ownership ties you down. So for example, let's say that you're renting a place and you get a job in another city that's really attractive to you, and you want to move to that other city. It's far easier for you to do that if you're renting a place and you can kind of email your landlord being like, hey, I'm moving out next month or something. Versus if you owned a home where you have to go through the whole hassle of trying to find someone to buy it, that can take months and months. There's far less certainty. And so maybe you're less likely to take that job opportunity in the first place because you're worried that, you won't be able to find a buyer for the home. It's far more there's far more paperwork. It's much more trouble. And so potentially you might be less able to adapt to opportunities as they arise. What can negative teams say in defense of buying? The first thing that they can talk about is that home ownership obviously gives you an asset that typically appreciates over time. That's really good because, maybe it's the case that, 10 years down the line, you can sell that home for far more than you bought it for. And that, opens up a far wider array of opportunities than you might otherwise have had. And financially protects you if something else goes wrong in your life. And secondly, the stability of owning your own home can be very useful. Versus the risk of renting, given that your life circumstances might change. So let's say that you lose your job, or you're self-employed and you're finding it really difficult to make money, or there are just some random exogenous economic problems, right? So you're in a recession, there's some other economic shenanigans going on that's making things difficult. It's a lot nicer to own your own home rather than renting and potentially, missing out on rent and getting kicked out, that sort of stuff. Having that constant pressure to pay rent. How do you win this clash? So one way is to appeal to the particular challenges of our context and explain why those might point in favor of one side or another. I'm going to focus on negative here just because the motion results seem to suggest the negative team found this topic a lot harder than affirmative teams. So what might negative teams say? Well, you could say that the fact that the global economy and many national economies around the world are quite unstable make home ownership more volatile. So make home ownership more important, rather. So if we live in a increasingly volatile and unpredictable world, it's far more important to own a home rather than rent, because then you can have something to kind of fall back on. Or you could point to the likelihood of rent continuing to outstrip wages. So in the past few decades, we've seen this consistent trend where not only is rent higher than wages, but that rent is growing at a quicker rate than wages. But the difference between those two figures is growing exponentially larger. And if that trend continues, then it's probably a good idea to have as many people owning their homes as possible rather than renting. The second clash in this debate then is on ownership. Also, if it's the case that on side negative that these homes are bought by individuals who then rent out to other people, the key difference then between the two sides of the debate is whether or not you're renting from a home owned by an institution or whether you're renting a home owned by an individual. There are a few things that the affirmative team can say. So the first thing that they can talk about is provide reasons why the homes will be of better quality because of the size of institutional investors. So the fact that these are large pension funds or hedge funds or whatnot, that really matters to the quality of the homes on offer. The first thing that they might be able to say is that there's more likely to be good upkeep over time because these institutions have greater access to capital. So it's easier for them to access loans because they're big funds, they have lots of capital, and so they can get loans at a cheaper price in larger sizes and far quicker. Or they're able to cross-subsidize. So lots of these funds not only invest in properties, but they also invest in stocks, in bonds, in whatnot. Which means that if they're doing really well in one of their divisions, they're able to send over some of that money to like the property division, if that needs to be the case. And so there's more likely to be kind of good quality repairs and maintenance and generally investments to kind of keep up to maintain the value and quality of life of that property that property can provide. Whereas on the flip side, obviously, it's far more difficult for an individual landlord to offer that. The second thing that affirmative team can say is that the price of rent is more likely to be stable because institutional investors are more resistant to shock than individual landowners. So as a simplified example, let's say that there's an individual landlord and they have two investment properties, but for some reason they're finding it really difficult to find someone to rent one of them. To make their money back, they probably need to raise rents quite significantly on the other renter that they have, right? Because they only have two of these properties to make money from. Compare that to an institutional investor that owns an entire one of these build-to-rent apartments. Even if they struggle to fill a few of those rooms or those apartments, like flats, they don't need to raise rents as much to make back their money because they just have scale on this side, right? They own this entire building, and so there's less urgency for them to raise rents. Not to mention that they can cross-subsidize from other areas of the fund. Obviously, you need to prove that these institutions will have the incentive to do any of these good things. I think that you can just talk about competition incentives, that sort of stuff. I don't think that's particularly difficult. But the TLDR is that insofar as both institutions and individual landlords have incentives to be like somewhat decent towards their renters, institutions have far greater capacity to do that. Affirmative team could also argue that they are more likely to get volume, so they're likely to get more development in total. One reason why that might be the case is because institutional investors can just afford to invest in like really large apartment buildings, so they can probably go to the development company and say, the construction company and say, hey, we're willing to foot the bill for this like really massive apartment, whereas that might be far more difficult on the comparative. And that's really important because you're able to get apartments that are really big and can house lots of people, which leads to kind of more supply of housing and that sort of stuff. And so basically, if it's kind of basically on side affirmative, it's easier for the government to incentivize like really large scale housing developments, whereas it might be far more, either you don't get the same volume under side negative, or the government has to splash out way more to incentivize that sort of development, just because it's more difficult if you don't have the guarantee and the pool of capital that an institution like a hedge fund can supply. What can negative teams say here? They could say a couple of things. The first is that there's still less likely to be competition that drives down rent prices and drives up quality, because you have entire apartment buildings, or maybe multiple apartment buildings, being owned by the same fund. So obviously, affirmative team can basically model in that they would try and avoid monopolies. But I still think it's fair to argue that there's comparatively more competition on side negative if it's the case that the competition is between lots of different individual landlords, right? So there's like lots and lots and lots of those landlords. Whereas maybe there's competition between like 2 or 3 funds under side affirmative, which still counts as some competition, but is obviously less. The second argument that negatives can say, I don't know how much I believe this, but I think that's something that they could possibly argue, is that these funds can invest in lots of other things. So maybe they could argue that it's just, there's other reasons why these hedge funds there are lots of other things that these funds can invest in. For example, they could invest in stocks, invest in like Silicon Valley tech firms that are doing lots of innovation. And those are probably more socially utile because you're putting money into things that, might, lead to inventions and stuff that help people's quality of life or produce goods that are really useful for lots of people. I guess it's kind of difficult to kind of make the adjudicator care about that, I guess. Like, it seems a little bit less connected to the rest of the debate, but I think it's certainly an impact that you can shoot for if you are so inclined. There's also, I think, a potential clash on accountability. So on which side are landlords more accountable? Affirmative team could argue that institutions provide a single point of accountability for numerous renters. So if one fund owns the entire apartment building, then they're the single point of accountability for everyone that is renting in that building, which makes it easier to launch legal action when necessary. So if lots and lots of renters are facing the same problem, then it's far easier to pursue legal action against the institution, because you can do something like a class action lawsuit. You can bundle all of your experiences together, and that provides far more weight to your complaints. Negative team can respond in a couple of ways. The first thing that they can say is, well, these institutions are way larger, and so they have far greater capacity to resist legal action, right? So they have millions and millions of dollars. They can probably afford super good legal defense, which means that they are far more able to withstand legal action compared to individual landlords. And that is a problem because it leads to moral hazard. Because if these institutions don't think that they're going to be, they think that they could basically dodge legal action when it is pursued against them, then they're far more incentivized to kind of be a bit reckless vis-a-vis their renters. But the second thing they can say is individual landlords are far more sensitive to criticism when things go wrong, because they are very reliant on a small handful of properties. So if there's an individual landlord and they only own like one investment property that gets rented out, if they provide a bad service and a bad experience and they're kind of not a great landlord, then all of the previous renters of that place are going to like post about it. They're going to warn future renters of that property. They're going to be like, make a loud fuss about it. And because that individual landlord is totally reliant on that one investment property, they're far more sensitive to that criticism compared to a really large institutional investor, like a massive hedge fund, that probably doesn't really care too much if a few of their renters in like a massive apartment building are complaining, because they can rely on lots of other investments. Those complaining renters will only be a handful of the total pool of renters that live in that apartment building, et cetera, et cetera. And so they're kind of a bit more insulated, or they're less scared, basically, about individual particular renters complaining when things go wrong. I hope all that made sense and that was helpful, and good luck for the rest of the tournament.